The accelerating de-dollarization crisis. Japan dumps US bonds, India-US trade deal, and Buffett's warning. Introduction. The global financial landscape is undergoing a seismic shift as de-dollarization gains unprecedented momentum. Key economic players, including Japan and China, are rapidly offloading US Treasury bonds, while legendary investors like Warren Buffett and Michael Burry are sounding alarms over an impending financial crisis. The petrodollar system, which has underpinned US dollar dominance for decades, is crumbling, forcing the US to seek new alliances, such as a potential India-US trade deal *, to mitigate the fallout. This article explores the accelerating de-dollarization trend, Japan's massive sell-off of US bonds, the strategic importance of the India-US trade agreement *, and the warnings from financial titans like Buffett and Burry. We also examine how BRICS energy policies and the decline of the petrodollar could reshape the global economy. Japan's massive sell-off of US bonds, a sign of crisis. Why is Japan dumping US treasuries? Japan, historically one of the largest holders of US debt, has been aggressively selling US Treasury bonds. Recent data shows that Japan sold a record $200 billion in US bonds over the past year, raising concerns about the sustainability of US debt financing. Several factors are driving this move. 1. Rising US debt and inflation. With US national debt exceeding $34 trillion and inflation remaining stubbornly high, foreign investors are losing confidence in the dollar's long-term stability. 2. Yen weakness and intervention. The Japanese yen has plummeted against the dollar, forcing Japan to sell US bonds to stabilize its currency. 3. Diversification strategy. Like China, Japan is reducing dollar dependency, shifting reserves into gold and other assets. China's parallel move. A coordinated de-dollarization push. China has also been dumping US bonds at an alarming rate, offloading over $500 billion in the last decade. Both Japan and China's actions signal a broader de-dollarization trend, where nations reduce reliance on the US dollar in global trade and reserves. Warren Buffett's warning, exiting banks and preparing for crisis. Buffett sells Bank of America shares. Warren Buffett, the legendary investor known for his long-term holdings, recently sold a significant portion of his Bank of America (BOA) stake. This move follows his earlier exits from Goldman Sachs and Wells Fargo, suggesting a lack of confidence in the U.S. banking sector. Michael Burry's ominous prediction. Michael Burry, the investor who famously predicted the 2008 financial crisis, has warned of another severe market crash. Reports indicate Burry has been selling stocks and hoarding cash, anticipating a financial meltdown. Is the U.S. banking system in trouble? The U.S. banking sector has been under strain since the 2023 collapse of Silicon Valley Bank and Signature Bank. Rising interest rates, commercial real estate defaults, and bond market instability are exacerbating risks. If Japan and China continue dumping U.S. bonds, yields could spike, triggering a debt crisis. The petrodollar's decline and BRICS energy threat. What is the petrodollar system? Since the 1970s, the petrodollar system has ensured that oil is traded exclusively in US dollars, reinforcing dollar dominance. However, this system is now under threat. BRICS, nations challenge dollar hegemony. The BRICS alliance Brazil, Russia, India, China, South Africa is leading efforts to ditch the dollar in energy trade. Key developments include Russia and China trading oil in yuan and rubles. Saudi Arabia is considering non-dollar oil deals. India settling trade in rupees with UAE and Iran. Impact of a petrodollar collapse. If the petrodollar system unravels, the US could face hyperinflation as dollar demand plummets, higher borrowing costs as treasury bond sales decline, reduced geopolitical leverage, weaker sanctions power. India-US trade deal. A lifeline for the dollar. Why the US is pushing for an India trade agreement. With traditional allies like Japan and EU nations reducing dollar dependency, the US is turning to India, a fast-growing economy, to bolster dollar demand. Key aspects of the India-US trade deal. 1. Strengthening bilateral trade. The US wants greater access to India's massive consumer market. 2. Countering China's influence. A stronger US-India alliance could offset China's dominance in Asia. 3. Promoting dollar-based trade. The deal may include clauses favoring dollar transactions over local currencies. Challenges ahead. India's close ties with BRICS. New Delhi has been increasing rupee-based trade with Russia and UAE. Domestic resistance. Indian farmers and manufacturers oppose U.S. demands on agriculture and intellectual property. Will de-dollarization lead to a U.S. economic collapse? Possible scenarios. 1. Gradual decline of the dollar. The dollar remains dominant but loses share to yuan, euro, and gold. 2. Sudden currency crisis. If bond dumping accelerates, the U.S. could face a balance of payments crisis. 3. New financial order. BRICS could launch a gold-backed currency, further eroding dollar supremacy. Can the U.S. stop de-dollarization? The U.S. has 3 options. 1. Reduce debt and inflation, restore confidence in the dollar. 2. Strengthen alliances, secure more trade deals like the India-US agreement. 3. Military and economic pressure, use sanctions and diplomacy to maintain dollar dominance. However, with Japan selling U.S. bonds, Buffett exiting banks, and BRICS pushing alternatives, the trend seems irreversible. Conclusion. The inevitable end of dollar supremacy. The de-dollarization movement is accelerating, driven by Japan's U.S. bond sell-off, China's yuan push, and BRICS energy policies. Warren Buffett and Michael Burry's alarming exits from banks suggest a looming financial crisis. While the India-US trade deal could provide temporary relief, the long-term decline of the petrodollar and the rise of BRICS alternatives indicate that dollar dominance is fading. Whether this transition happens gradually or abruptly, one thing is clear: the global financial system is changing, and the U.S. must adapt or face economic turmoil. Final thoughts. Investors. Diversify into gold, commodities, and non-dollar assets. Policymakers. Prepare for a multipolar currency world. Public. Stay informed. Economic shifts will impact jobs, savings, and inflation. The era of unchallenged dollar supremacy is ending. The question is, what comes next?
The US dollar has dropped over 4.3% this month, marking its worst decline since November 2022, and one of the biggest since 2000. Combined with a 3.2% fall in March, it's heading for its worst 2-month period since 2002. Analysts worry Trump's inconsistent tariff policies have hurt confidence in US assets.
Trump tariffed, he untariffed, he re-tariffed, and he partially untariffed, and said, I could flip that again. All right, that's a flip-flop. So how do you invest money and have a long-term strategy when the rules are changing almost daily?
French Prime Minister François Bayrou warned on April 15 that Trump's tariffs have eroded global trust, impacting the world's reserve currency and challenging France's public finances.
President of the United States has unleashed a storm whose consequences will not stop soon by giving the go to a global trade war without warning, from one day to the next, striking with unimaginable tariffs, first its Chinese competitors, then its closest allies.
Some analysts think tariffs might raise US prices, keeping interest rates high. Others believe Trump's unpredictable actions are deterring international investors. There's speculation that China is selling US bonds to counter Trump. However, Trump believes the dollar will strengthen long term.
You're talking about the value of the dollar, which is what I'm talking about. I think the dollar is tremendous. It's going to be stronger than ever.
Rebuilding trust needs Trump and China to reverse tariff hikes, and for the US Congress to address the deficit. It's a pretty big ask, considering the hardening of positions.
China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced the tariff wall last week, many of those goods have already started flooding into Europe.
In the near term, no fundamental factors suggest improved investor sentiment, and US administration rhetoric offers no optimism for a dollar recovery. The Economic Brief, DD India.
Well, Dr. Amit Kapoor, how much of the US dollar's value is dependent on the Fed policy and how much of it is dependent on world trade?
I think if you really talk about economies per se, like the biggest factor which defines a currency is the trade that happens, and trade in terms of the innovation capacity, the productivity that a country has. The Fed policy, of course, has an impact, not that it's not going to be there. But when we say trade is one of the most important factors, and if you really look at the strengthening of dollar over a period of time, it was all driven from the trade resilience or the global what I call free market system that actually got created after the rise of the Bretton Woods or Bretton Woods organizations in 1940s. And what we are really seeing now is that with the whole world order changing, this can actually have a huge impact on how the dollar is functioning and how the dollar is seen. I think there is a danger that the dollar might actually start losing value over a period of time because it might not actually stay the most important currency in the world, because until now it has been seen as the currency of the world trade.
Right.
There have been some ideas in terms of having other currencies be the dominant currency, but it has not happened over the last few decades. So there are going to be challenges to that. When you talk about US is on a very, very weak wicket right now. I think I'm very surprised with the kind of actions that have actually happened there. And as one of the commentators in the program, he said like that flip-flop is going to create a lot of anxiety over a period of investments will dry out, productivity will actually slow down, inflation will rise within the US, and it will have huge negative.
So, Dr. Kapoor, then how is this going to impact central banks who are holding the dollar, as well as institutional investors who are investing through the dollar, and how is it going to impact India as well? I mean, considering that India too holds a lot of dollars.
No, so if you really look at it, like India's the dollar holding or the bond holdings in China far greater than what India actually has. I don't think in the immediate short term, when I say short term, in the next 3 months to the next 18 months, it is going to have some catastrophic effect on India or whatever, because I don't really see the dollar is going to crash. You will see certain adjustments that are going to happen there. But if you really look at it, there is a huge behavioral shift that we have started seeing since December. And what we have seen is that people have actually started buying treasury bills in large numbers. So if you really look at December, I think the number was 2.3 billion in treasury bills were bought, then 67 billion in January, and 61 billion of treasury or short-term treasury bills in February. And what we are seeing is that those US bonds are getting sold. And they have actually started, and what that means is that people are just focusing on the short term right now, rather than the long term. But from an India perspective, I think it's a dual layered kind of a thing. When the dollar weakens, what happens is that our exports will actually suffer a bit in terms of saying that exports become a little more expensive, because suddenly from 88 rupees it comes to 80, then suddenly everything that is going out, it becomes a little more expensive for us, because I get lesser number of dollars for the whole set of things. So that might actually create a bit of a skirmish, but this is where I think the government has been preparing for it. I think the Indian idea from 1991, and especially after 2014, has been to focus on improving productivity in India. So if we actually work on that productivity idea, and if we get our productivity numbers right, this will not have a huge impact. I think, very recently, what I call Commerce Minister, Piyush Goyal ji, had actually made a statement that there could be a chance that Indian, and very recently means about 6-8 months back, when he said, oh, have a stronger rupee. I think there was an anticipation in terms of saying that if the rupee is stronger, that means we need to move towards productivity, improve our capacities in manufacturing, and that is what we should look at.
Okay, we'll leave it there. Thank you very much, Dr. Amit Kapoor. Thank you for enlightening us on these two stories.